Well, hello everyone. Welcome to After Hours Trading. A little bit of news. This is the last week this class will be called After Hours Trading. Next week, it will have a new name and it will be called After the Close. And what we're going to focus on in After the Close is if you want to be an investor or a trader, and you could want to be a very active trader, but you're constrained in that you have a regular job or you have obligations during the day, and you want to be able to do your analysis and place your trades outside of regular market hours, but you want to have them filled during regular market hours when there's a higher volume of stocks and options trading. So this is not a class designed for trading in the after hours per se. So I just wanted to be clear about that. Having said that, there's a little something for everyone in this class going forward. We're going to look at people who want to buy and hold a stock for a longer period of time. We're going to look at people who want to do short-term trading to generate an income. And we're going to review together some specific strategies that you can tweak and make your own to do some short-term trading. And all of this, where you may not sit down to look at the markets until, 8 o'clock at night, or you may want to look at the markets, an hour or two before the markets open and then get on with your day. Okay, so, if you are not following me on X, I encourage you to do so. My handle, Barb Armstrong CS. Mike Fairborn is with us in the chat. His handle, Mike Fairborn CS. We're both posting content on a daily basis that we think you will find helpful. And so let's get through our important information, because I think we've got a really exciting class lined up. We're going to do some short-term trading strategies if you wanted to earn some income, and we're going to do some longer-term buy and hold trading example strategies as well. So just know, though, that everything we talk about in this class, as with all our webcasts, it's for information purposes only. None of the example trades that we do are to be construed as a recommendation on the part of Schwab or myself. Know that options carry a high level of risk and aren't suitable for all investors. We are going to do an example option trade today. And while we look at technical analysis, other approaches, including fundamental analysis, being aware of what's going on with earnings and all of that is pretty critical as well. We use the Paper Money software application on the Thinkorswim desktop platform. And yeah, sorry, I'm trying to read the chat and talk at the same time. That's not working very well for me. Anyway, Paper Money is a brilliant place to learn, to become familiar with the platform, make sure you understand how you want to trade, and that you practice that in Paper Money before you go to your live account. When we use stop orders, it isn't a guarantee that we'll get out at a particular price, or perhaps get out at all if we're using a stop limit order, for example. So what we're going to do today, I've got one quick announcement, and then we're going to take a look at what's going on in the markets. We're going to discuss some specific types of differences in trading strategies and how we might build a portfolio, or how an investor might approach building a portfolio. And it comes down to our goals. Now, I will say we are going to have some special guests joining us today, and I'd appreciate it if everybody could just give them a really warm welcome when they get here. We have a live event happening in Seattle as we speak. And so, they are going to be coming in. And if you've never been to a live event, there's about 350 to 400 people in Seattle right now doing a 2-day technical analysis and options workshop. If you live in Seattle, you could join them tomorrow. I'm sure they'd find a spot for you to sit. Next weekend, Ben and the gang will be in Atlanta, and I will be there with them. So if you're there, please come up and introduce yourself. I'd love to meet you. Then there will be a 2-day workshop in Scottsdale. And then we are have relaunched the advanced options workshops, and we'll be doing an advanced workshop in Chicago, and I'll be there for that as well. So guys, if you want to attend these, make sure that you get registered because they fill up quickly, and I'd hate for you guys to end up shut out and feeling angsty about not getting a reservation, particularly, given that they're free. So they're free to attend. Yeah. We need a Q&A class. You know what, Greg? You can ask questions in any class, and I will, between Mike and I will do our best to answer them. If you're watching this in the archives, you too have a voice, and we will do our best. I look at those comments every single day, and so if you've got questions, don't hesitate to ask. Okay, so we're going to go out and have a look at what's going on in the market in general, and then we're going to get into the heart of the matter. And the first thing we're going to do is review our little portfolio, when we get to that part of the proceedings. And so, when we look at the S&P 500, the overall trend is uptrending, right? And I've got a 1-year chart up, and if I come down here to show price as a percentage, we can see that in the last year, this market is up 23%, or this index is up 23%, which is, pretty stellar, double what it is in an average year. And, if we look at the NASDAQ, it too up about 23%, a little more consolidation in this index. And it's, had a little tougher week from a tech perspective. And this is a very tech-heavy index, no financials, which, sometimes you might be grateful for, but, the financial sector has been very strong and, is close to hitting all-time highs. So our Russell up 15% in the last year. All the indices kind of pulled back in December when Santa decided not to play and bless us with a rally. But that's that one. And then the Dow, up 16%. It too pulled back in December, but is now, close to an all-time high. So we now have Ben in, he with 350 of his closest friends or so coming in from Seattle. We are delighted that you guys have joined us today. So a big warm welcome to everybody out in Seattle. I love attending live events, both, as a client when I started back in 2011 and certainly still now as a coach. So, so glad you guys are all here. Yeah. And feel free to tune into this webcast when you get back home, because we have $1 million we have pretended to inherit, and we're looking at how to invest it when you may not have time during the regular market hours to sit down and follow the market. So you might want to sit down at 8 o'clock at night and then go off and golf if you're in Seattle, or I don't know, go whale watching at this time of year. So hi guys, we're glad you're here. Okay, so we are going to take a look at the major indices. And for this, we're going to come down to our sectors. Actually, we're going to come down to a public watch list called the S&P 500 Sector Indices. And when we look at this now, one of the things that happened recently is that there was an update on Thinkorswim. And so I want to customize this little watch list because S&P 500 hashtag 10 means nothing to me. So I'm going to come in here and put in description. And, there's a group of trade management mini sessions if you forget this and want to go back. And then we're also going to add a 4-week return and a 3-month return. And then I don't care about bid and ask. So we're going to get rid of that. We're going to move description up above net change. We don't really care about the last price either. So we're going to kick that to the curb, and voila. And so what we can now do is sort and say, okay, over the last 3 months, which sectors have been leading the pack? Well, that's consumer discretionary And I'm going to link this chart, this watch list to the chart, so that when I click on consumer discretionary, we can see that, it pulled back along with the rest of the market, but is close to, seems to be rebounding nicely, up 37% in the last year. So leading the NASDAQ and the S&P. The communications sector hit a new all-time high today. Financials hit a new all-time high today. So, maybe we want to look at some stocks in these sectors, right? And these have been the three that have been leading. Industrial's a little more up and down, but still up over 20% in the last year. And then when we take a look at the last 4 trading weeks, communications and financials still 2 of the top 3. Okay. So we are going to come and we are going to first do a quick review of what's already in our portfolio. I'm going to get rid of that gadget. And then we are going to add some things to our portfolio. So what we have, and it's interesting because when you are building a portfolio, and at the beginning of the year, what we said was that we were pretending we had inherited $1 million in cash. So we had $1 million sitting there in cash, and how might we invest it? And so you want to look at, what you want to get out of your investing. So one of the things that you might want out of this is might want to protect what I call your giant heap, right? You want to protect the money that you already have, this $1 million. Okay. Second thing, and that's pretty valid, right? You might want to grow it. So, that's another thing. And not everybody, in fact, very few of us actually inherit $1 million. And then the third thing we may want to do is we may want to generate some income. And we can do that, generating some income, a couple of different ways. So one, we can invest in a stock that pays a dividend. So we can look for dividend paying stocks. Another thing that we could do is some shorter term trades where our expectation is that we'll be in and out of that trade within a matter of days to weeks, or maybe a month and a half, so that, somewhere between 3 and 50 days, so that the goal is to make some money that we could then spend and put it into our buy a new car fund, or take the kids to Disney, or take Barb to Paris fund, or like whatever it is, right? And these are just like ideas, but you have different goals. And so you want to be aware of what your goals are when you're trying to design your portfolio, or in our case, our example portfolio. And so when we look at this here, we're up a whopping $2,600, which on $1 million account is not a lot, but we've only, traded, I think I've taught this twice this year. So, like somebody saying, your overall profit and loss is pretty low, but, I'm only trading in this class. We're building this portfolio. So we have one stock that we bought. And if you're wondering when we bought it, if you click on this and then come down to view trades, you can see we bought this January 27th. Okay. So we must have put in a conditional order on this, and it just got filled. Okay. So if we come here to our account statement and we enter T, you can see that this order filled on the 27th, but when was the order placed? It was placed on January 2nd. Okay. So let's go out and look at that. But, why did we buy this stock? We bought this stock because one, it pays a dividend. So I've added dividend yield here. We can also come to the trade tab. And if we put in our AT&T and we come down, and there are always these little arrows. We can see our dividend yield is 4.6%. So that will generate some income. And our price earnings ratio is $16. And so if somebody was looking for a value stock and they said, well, I define a value stock as something under $20 a share, which means for every $16 you invest in AT&T, it generates $1 of income. And so, and dividends, there's never any guarantee that they're going to continue to be paid, but that was the decision on which we placed that trade back on January 2nd. But we said unless it goes above, and so this was January 2nd when we put this order in, and then it pulled back. And so the order didn't get filled because we said, hey, it has to go up above that day's high. And so on this day, we got in, and, it opened at 23.50. So let's see when we got filled on that. So if we come here, we can see that we got filled on the 27th, right at the beginning of the day, which is why, we have a bit of a gain on this. So this is when we ended up getting in, if we want to put this on our chart. Okay, so that was our AT&T trade. We put it in here, and it took 3 weeks before we got in. And some might, say, oh, I want to edit this. Well, we could just cancel it because we got in at the beginning of that day. So they might rather put their drawing like this because that's when they got in. Okay, so that's AT&T. Now we have 2 stocks that we bought, trend trading growth stocks. One is GoDaddy. We bought 100 shares of GoDaddy. And we did that in last week's class. And we're up 3% on that. And then we also bought shares of Amazon. And Amazon, I think we bought a little earlier. We bought that. That order did fill. So we put the order in on the 2nd, and it filled on the 3rd. And so we're up 5% on that position. Today it pulled back a little bit, but we're in this as a longer term position. And so that's Amazon, and then GoDaddy we entered last week. And we did 2 trades on GoDaddy. So one, we said we are going to buy, and if you're not familiar with this company, if you come to the Analyze tab, I've got a link. It's part of the tech sector, and you can read some information. You can come down and look at a lot of the basic fundamentals as well. But we also did a trade where we did a short-term trading strategy with a flag pattern, which has a very specific set of rules. And these were typed in last week, and I'm just going to bring them up again. So our starting account size was $1 million. Our max position size is 5% of the account value, or a $50,000 position. And our max risk per trade, we decided would be 1/3 of 1%, or 3,300. Now, some might say, well, I'd be cool with half of 1%, which would be a $5,000, up to $5,000 worth of risk. But, this is very much an individual decision. You can make it whatever you want. And so we're just starting out, and we're being a little more cautious. So we're saying 1/3 of 1%. So last week we did this, a flag target example trading plan. And we said what we were looking for was a stock that was uptrending, that was heavily traded, as in 1 million shares a day or more. Now, some might want to make that number bigger, like 5 million. And again, and some might say, I'd be cool if it's a stock trade with it being 500,000. But, this is kind of what to buy part of it. And we're looking for a flag pattern. So we had that on GoDaddy, and this was the target we came up with. And our time frame, if it was a swing trade, might be 3 to 5 days, more like, 10 to 20 days typically on a flag target. But our mid-management rules, when it hasn't hit the stop and hasn't hit the target, is that when it hits the swing target, we move the stop up to the entry price. Now, this one was a little unusual in that by the time, because our low day had such a big tail on it, by the time we entered the trade, which was, by the time we entered the trade, we were at the swing target, which was on this day. But then the second mid-management rule, and you could include this in your plan, or you might say, yeah, no, I'm not going to do this, but it's to move the stop up to 20 cents below the low of, sorry, this should be the bearish candle. Yeah, sorry, that was a typo. So we had a bearish candle yesterday, and so we would have moved our stop up to 20 cents below that low. Yesterday's low was 212.04. Today's low was 212.26. So it was a little higher, but it's still a bearish candle. So we're going to move our stop up to 212.06. And this is not, sensitive to the price of the stock. It's 20 cents below. So how do we adjust that stop? Now, we did this on a stock. So we're going to come here to our stop and move it up to 212.06. We're going to write that down. Okay. So I'm coming to the monitor tab. I'm coming to this stop, and I'm going to cancel and replace it. And I'm moving it up from 201.92 to 212.06. Now, in doing this, what am I attempting to do? I'm attempting to protect some of that gain that we have already seen, because what the market giveth, the market can taketh away, right? And how often have we had a successful trade? And there was a coach, actually, one of the coaches that taught me this strategy back, in 2012 or 2013, said there was a guy, call him Bob, and Bob was really great at getting in, and he'd be up sometimes, 500, 1,000, sometimes $2,000, and then he'd be up 1,500, and then 1,000, and then 500, and ultimately he'd end up, losing money on the trade. And so we can snatch defeat from the jaws of victory, and by having a trading plan with a specific set of management guidelines, we're trying to prevent that from happening. Okay. So we're trying to control our risk and protect our profit once we have some. But, and if this goes up, now sometimes our petunias get frosted because it comes down, it nicks us out, we end up out of the position, and then it goes up and hits the target. But could this be setting up another bull flag? It could be. And so if we get stopped out, do we burn a candle and say that this stock is dead to us? No, unless it gaps down on the open tomorrow, we bought this for 207. If we got out for 212.06, we'd still have made some money. Okay. Are there any questions on that? Paul is saying that's what dividend aristocrats and kings are for. We will talk about the aristocrats and the kings one of these days. Today, that's not what's on the menu. Okay. Okay. So there's our trade management. Now let's go and look at something new. And so I want to start with something in the financial sector. Why the financial sector? Well, it's been strong in both the last month and in the last 3 months. Remember when we came to look at the financial sector hitting a new high today? And then when we look at Citigroup, and I was doing a little planning before the class. So that you can now tell that I was doing that. But if we look at Citigroup, it's up in the last year 43%. I'm going to change this back now. So, it has done well. It has been one of the stocks that has contributed to the success of this financial sector, right? And if we're looking for, a stock that is uptrending, a stock that is heavily traded. So we come to the trade tab. Does this trade more than 1 million shares a day? Well, today it traded 10 million. Now, could we just add this stock to our portfolio? Like, it does pay a dividend. It does have a price earnings ratio that might be appealing, even with the gap up on its recent earnings to value traders. So could we just say hey, I don't want to take a full position because I'm going to do another type of trade for this, just to show you two different types of trades. Maybe we could do a half a position, $25,000 worth, which would be about 300 shares of stock. And how did I get that? Well, I came down here to my calculator and I said, okay, if I had $25,000 to invest and I divided that by the closing price, which was close to $82. Oops, I did something wrong there. 25,000 divided by $82. Okay, so that's about 300 shares. So if we said, okay, we'd like to buy 300 shares, and we're just going to, as long as this continues to move in an upward direction, we'd like to stay with it. And now, if we wanted to put our stop below the 30-day moving average, that'd be a really long way from where it's currently trading. But could we say, hey, our recent low here was 79.48. Could we put a stop 3% below that? And we could. So we could say, okay, if I take that 79.48 and I multiply that by 0.97, my stop is going to be at 77.09. Well, if I'm getting in at about $82, I'm risking about $500 a share, $5 a share times 300 shares, so about 1,500. And so if we look at this and say, okay, well, 1,500, we don't want our risk to go over 3,300 for any one trade. So even if it gapped down and we got out a little lower, we would still likely be okay. Okay. And some might say hey, this gapped up and then has continued to move to the upside. Why would we buy it when it's within a stone's throw of this high? Well, it gapped up here too. And don't we wish we'd bought it then? So sometimes an object in motion will continue in motion and sometimes it doesn't, which is why we're putting a stop in to protect ourselves to the downside. So we're going to come to the trade tab. We are going to right click and you'll notice that even though we're in the after hours, the bid-ask spread isn't terribly wide. We've gone from 81.75 to 82.11. Sometimes, when we looked at GoDaddy last week, it was a couple of dollars wide. Yeah. So we are going to buy custom with a stop. And, it's saying here the ask is 82. That gives us a bit of room. What this is saying is don't pay more than 82.11. So if we're okay with that, we could just leave it. Now we could adjust it down and say, let's just make it 82 even. You can do it however you like. And we're going to link our quantities on the stop together. And we are going to put our stop in, which was 77.09. And on this one, we have not over 900,000 of our $1 million still sitting in cash. And so we're just trying to put some of that to work in a way that will service both our growth goal and provide some income potentially. And of course, now one of the differences or nuances between a paper money account and a live account is that dividends are not actually ever paid in a paper money account, where they are paid, in a real account. And so we're going to put this into our stocks dividend group. Even though we're buying it also for growth, it just reminds us that there's a dividend available. And this Citi group just had earnings on the 15th of January. So it's paying a dividend on February 3rd. Okay. So the point of top-down analysis is that what you want to do, and the reason we look at the markets overall, and let's just take we don't have a lot of time, the time goes so fast, is that if the market is tanking, is that when you want to be investing? If the market overall is falling, there might be a few stocks that are doing okay, but the current of the market often will drag a good stock down, or has the potential to do that. So we're looking, and some might say here, when we're looking for the stock to be uptrending, they might also say, I also want to see that the sector is uptrending and that the market's uptrending. Okay. Yeah. Okay. So that's what we're doing. Okay. So that's Citigroup. Now, could we also, and I'm going to hide these because they can be a bit distracting, could we also do a shorter term trading strategy with that bull flag pattern and say, hey, we've come from here to here. So, call it 1650-ish. Could we then buy, let me just duplicate this. And with this trading plan now, some flag trading plans say you go from, the low of the low day up. Our trading plan says we're going to go from where we entered it, and that's where we're going to put our target. But, we also had a gap up on our earnings here. And so the length of this flag, it would give us a target of about, see, we went here from 82.77, and the low on this day was 70.98. So if we take our 82.77 and we subtract our 70.98, that's about $11.80. And so if we look at, where we closed today at 81.86, and we add, so here's our example flag trade. And we can either do this with stock, or we can also do this with an option. Okay, so we are going to look at our target being that 81.86 plus the length of the flag of 11.79. Plus, I'm just going to use my calculator here, 81.86. So that's 93.65. And we might say, well, we don't have to get the whole distance. Maybe we make it, 91.65. We could knock $2 off it. We don't have to get the whole move if we get a part of it. And, this also, these ideas of, having a mid-management rule, so that if it gets almost there, and I remember a trade last year we had on Apple where it got within 15 cents of the target, and we said, you know what, close enough, we're taking it. So what we are going to monitor these daily, and then our exit is 20 cents I may have erased something. So our entry is when it goes above high of the low day. When it trades above the high of the low day by 20 cents. And then our exit is going to be 1% below the low of the low day. So our low day on here, so, you know, we already have our entry because it's gone 20 cents above the high of this day. Our low of the low day is 79.48. So in this example, our exit's going to be 79.48 times 0.99. So 79.48 times 0.99. So 78.98. Now, if we wanted to do this with an option, we can come to our trade tab. We're going to come out to March. And, you know, if we're doing this as an option, one of the things that we may want to add to our example trading plan is that we want to have, volume on the options contract as far in addition to volume on the stock. And we want to also have a tight bid-ask spread. Now, sometimes in the after hours, the bid-ask spread gets wide. With this, it's still 7 cents. If you say, well, I want that to be no more than 10%. If we looked out here at March and we said, okay, you know, if we could risk $3,000 and this is $250, we could do 10 contracts. You know, and we're close here. It's at 81.86. Our previous high was 82.77. So if we went for our flag target, that would be 91.65. So we're going to come in here. We're going to do 10 contracts. And in fact, so we're going to buy a single. Now we could do this as buy custom with OCO, but this is just another way of putting in an OCO order. We're going to come down here to the bottom, single order, and make it first trigger sequence. We're going to do 10 contracts, and we are going to right click and create an opposite order. And we're going to make this a market order. And then this will fill tomorrow. Okay. And we're saying we're willing to pay up to $250, but we'll want to check this when the market opens to make sure that our order has filled. And if it gaps up tomorrow, we may decide that we don't want to take the trade. So the first thing we're going to put in is our target, and our target is 91.65. And then we're going to put in our exit, and our exit is 78.98. So this is based on the price of the stock, not the price of the option. Now we do have an exit in place. So, you know, the plan is that we wouldn't lose the entire amount, even if the trade went against us, but we could. And so if we're trying to place a trade that's conservative using an option, we could lose up to $2,500. This is saying, you know, the amount we could make is unlimited or infinite, but we do have a target, you know, and our target is 91.65. And if we wanted to see how much that might be worth, you know, a ballpark, so we don't actually have a category created for this, but I will create one, and we'll call this long calls. This is a flag target so that we know when we go back what trading plan we're following and why we placed the trade in the first place. So we'll create a group called long calls, and then we can put it in there. So that's that one. So we've teed that up for tomorrow. Now, if you're saying, hey, if this goes according to plan, what might that option be worth? And this is just a guesstimate because I'm not going to take volatility into account. But if we said, okay, it's at 81.86, you know, let's say it goes up by $10 and whoops. And let's say it takes, I'm just going to hit enter. So that would put us at 91.86, which would trigger our exit. And let's say it takes until the 17th of February to get there. So it's going to take a couple of weeks to get there. What might this be worth? Well, it might be worth close to $10, $9.64. So, you know, we'd have more than tripled our investment. Now, how much could we lose? We could lose all of it. Okay. So Vincent's asking how you create a category, and I have a bunch of short videos on how to do that. And so you'll want to subscribe to the channel because if you do, and then you come over here to, oh, this is today's class, to playlists, and then come down to the trade management mini sessions, there is, if you scroll down to the bottom, a whole bunch of short videos. One is on how to customize charts. One is on the monitor tab, and I go over that in that class. But if you wanted to practice this on a couple of other stocks, you could look at maybe American Express. We might look at that one tomorrow in our trading a smaller account class. We could look at GE perhaps. You know, and this is a different type of breakout, but another bull flag type of pattern happening on GE Aerospace as well. Okay. Now, as we wrap, and let me just show you because we have a minute here. So here's our positions. So I can come up to, you see where it says position statement? I am going to add a group. And it'll bring up a little box, and we're going to call that group our long calls, which is the trader speak for buying a call. And then when this fills, we will move this position into the long call group. And then you can customize them. So I've customized this column in the stocks with targets to give me a net liquidating value and a profit and loss column. So you can customize these. Okay. So, but there is a survey in the chat. And so my ask is that if you're watching this live, if you would click on that link and fill out the survey, there's 2 questions. 1, I hated it, or there's just 2 questions, 1 to 10. 1, I hated it, 10, I loved it, and I'm going to come regularly, and then everything in between. And then you can put comments in. So if there are topics you'd like me to cover in upcoming classes, just feel free to type those in. If there's something you particularly like, let me know that too. Also, I'd ask that you hit the like button. So by hitting like, it lets Mike and I know that you found this valuable. But more importantly, it helps move this up in the algorithm so that more people can find this content. And we'd appreciate your doing that for us. And then don't forget to follow us in the Land of X, Mike Fairborn CS, and Barb Armstrong CS. So thank you very much to the tech team behind the scenes, to Mike Fairborn for showing up in the chat. You guys kept him busy. And then to each and every one of you for investing in your financial futures by attending a class like this. So, and thanks to all the guys that brought the class to life, Wiley and Paul and Dragon Rider. I love some of the handles, and Robert and the rest of the gang. Thank you all for being here. We'll see you next week. And if you want to join me tomorrow for trading a smaller account, that is at high noon Eastern. We link arms every Monday and Friday to talk trading a smaller account. And yeah, we'll see you there. So this is the end of our day for today. Hope you guys have an awesome evening. Take care, everyone. Bye for now.